Welcome to Trading Nation. I'm Mike Santoli. Big banks kicking off earnings season next week, and our next guest says it is setting up to be perhaps the worst one we've seen in years. Nick Colas is co-founder of DataTrek Research. Nick, good to talk to you. We obviously do look like, at least by the consensus estimates, first quarter earnings are going to show a decline, and yet the market seems to be acting like, at least at this point, it's willing to look through those declines. So what's your read on that right now?
Yeah, it's a very good point, because what's happened is this market's really been dominated by a rate narrative. Interest rates have come down materially over the course of the year, and that has buffered stocks against some worries about earnings. But once you have to face the actual earnings results, I think the story is going to change a little bit, and investors will ultimately care not just about rates, but about cash flows and earnings as well.
Okay, so they're going to care about the results, and you actually believe that the results are going to be a little bit of an adverse surprise here. In other words, the consensus is for somewhat of a decline, low to mid single digits. Usually companies beat. So where does that hash out, do you figure?
Well, I figure it's going to, right now, expectations are for a negative 3.9% comp to last year. That's the worst comp and the first negative comp since Q2 of 16. So we haven't seen a negative comp in a while. And more importantly, analysts have been taking their numbers down dramatically over the course of the quarter. We started the quarter basically thinking up 3%. Now we're looking more like down 4%. That's the biggest decline since the first quarter 3 years ago. Even if companies beat materially, though, the big issue here, revenue growth is still supposed to be 5%. So margin pressure is going to be the story for this quarter. If you're looking at up 5% revenues, but down 3, maybe even down 2% earnings with a little bit of a beat, you still have to explain why those margins are going to reverse in the back half of the year and earnings growth is going to continue. And that's the challenge companies will face, and investors will have to suss through if lower rates are enough to compensate for lower earnings.
Yeah, rising revenue, at least on an aggregate basis, and a still growing economy, and yet negative earnings comps. It sounds like within the market, there's got to be wide divergences in terms of which companies continue to grow, which ones are having the bigger margin pressure.
Yeah, there absolutely is. If you look at Q1, for example, there's only 4 sectors expected to show earnings growth. And it's all the defensive groups that have been working recently. Utilities is one, and real estate's the other. Healthcare has been challenged, but should show earnings growth. And industrials, for all of the drama around trade, should basically be flat. Everything else is going to be negative. And that's the challenge, looking at all these numbers as we get them in the next couple of weeks.
So do you figure the market is just kind of out there on a limb and a little bit vulnerable at this point, or you figure it'll just be a choppy period?
Yeah, look, for a trader, you're measuring risk as much as you're measuring asset price levels, and you have to consider how much risk is baked in based on the fundamentals you see coming down the road. And our call here is the market's basically fine, but look for quite a bit more volatility as we get through earnings season, because this earnings issue, particularly on the margin pressure side, is just a narrative that we haven't heard discussed very much and in robust form. And investors and analysts will have to incorporate those in the back half earnings expectations. And that's going to be a bit challenging, even if rates have come down.
Yeah, and obviously the back half of the year is supposed to rescue the earnings overall. So we'll see how that plays out. Nick, thanks very much. Appreciate your time today.
Thank you.
And thank you for watching Trading Nation. I'm Mike Santoli. See you next time.